So there's a coffee shop here, Dutch Bros, right? They're always very, very like over the top and really nosy. And my mom is so embarrassing. She'll go through a Dutch Bros and they're always like, what are you doing today? And she always says she's picking up her dad from prison. Just to see how they react. And I'm just like, oh my God.
You got to act super excited too. Like this is the best day of your life. Like I'm getting him from prison. This is going to be great.
Welcome to Drunk Real Estate. Grab a drink and enjoy the show.
Hey there, welcome to episode 77 of Drunk Real Estate. I am Kyle Wilson, Ashley Wilson's husband, and special thanks to producer Alex. She's always with us during the intros, and she chimed in this time, and she's now the new intro girl. That might be her new job. She just does only intros for us because we always struggle to get a good intro.
Do we call her producer Alex or intro Alex?
Well, that's true. It might be a classier one, but that chiming in there though first was no, I got to go. Mauricio is number one here. I moved you to the top. Riverside now lets you move people up and down on the page, so you are now at the top for today. So starting with Mr. Mauricio Raul, what's up, buddy?
What's going on, man? I got to say that I'm extremely, extremely disappointed, and I know that I speak for the entire crew, Jay and AJ, that you are back in the seat of being host. We absolutely loved having Badass Investor last week. We really wish you could be here every single week, but unfortunately we're stuck with you. All good. Looking forward to today's episode. It's going to be a good one. I'm drinking your favorite, Kyle, a little Pisco and ginger ale. Pisco
ginger piss.
Ale.
The ginger piss. I love it. Okay. Jay. So, well, actually, fun fact here. We're Monday the 16th. We're recording this. We're recording 2 episodes. So we should be we're going to take it a little bit easy this first episode. I might try and make it go quicker because we're doing back to back, and we might get a little bit sloppy for our second recording and doing our predictions episode. So pay attention. So when this one comes out, look forward to the next episode where we get a little bit sloppy. Because I told Jay, what do you get? Two bottles of wine ready for us? Is that what you got?
I'm going to finish at least one. So, and just to set expectations for anybody out there listening, we are not going to be releasing an episode next week, Christmas week. So, Merry Christmas. I don't know if it's Hanukkah. I should know that, but Happy Hanukkah. Whether I missed
You're the worst Jew ever.
I am. I celebrate Christmas for the most part. So yeah, no episode for Christmas week, and then we'll come back with the predictions episode, which we're recording right after this, and I'm going to be super wasted for that one on New Year's week, and I'm drinking. My first bottle is going to be this Oberon Cab. That's
a Costco special for sure.
It is a Costco special. It's one of my favorite Costco wines. So yeah, Oberon, and yes, Kyle, I'm thrilled to have you back. While I can't prove this, you'll just have to take my word for it. I did receive hundreds upon hundreds of messages last week about how much better of a moderator I was than you. But I am still glad to have you back.
I appreciate that. I received hundreds and hundreds of messages saying, please come back. We just can't stand Jay doing this again. So I guess they evened each other out. AJ, what's up, buddy?
How's it going, man? Doing good. I got my Mauricio, I got you. Got my red cup with my Diet Coke because on this podcast I am everyone's favorite designated driver.
Yeah, do we apologize now to AJ for being sloppily drunk in the second half of this?
No, I love it. It's great. Trust me.
We should actually, producer Alex. We should apologize to her because there might be a few F-bomb slips out here, and I think we're bleeping those out now. So it's we apologize in advance for getting a little.
We're bleeping him out then, so you can do it as much as you want. Then
yeah,
there's going to be a string of beep, 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 beep.
That would be fun. Well, we're going to try and keep it a little bit under control for this first one. Keep a high level discussion here, especially since we're talking about Canada. Like we like to discuss a lot about real estate in the United States. However, there are quite a few listeners that we have in the 51st state, as is about to happen. Apparently, Trump says Canada's getting brought into the fold. But AJ apparently has been paying attention to the correlation between the two markets and has noticed they've started to diverge a little bit. So AJ, what's going on up there in Montana North.
Yeah, northern Montana has been struggling lately, and it's been struggling with quite a few things. It's been going on for a while. I think, importantly, Canada, for the most part, tracks the United States in most metrics all the time, including GDP and even affordability. But the shifts have been pretty big. So I'm going to share here with the screen.
We're sharing screen already. We're like within. Like,
right off the bat. Jeez,
right off
we're
the
getting
bat.
serious.
Got to make sure that.
What parts of Canada are we talking about here? Are we talking about the parts where my high school girlfriends used to live?
Well, we already know that that's not true. So you didn't have girlfriends in high school. So
oh no, they lived in Canada. That's why nobody. That's why nobody ever
told all your friends.
He messaged them through ICQ.
It's like, you guys don't know her. She doesn't go here.
She doesn't go here. You'll never meet her, but trust me.
That's a good point, though. Is does it matter whether it's like English speaking Canada versus French speaking Canada? Does that have anything to do with this?
We as a Canadian, we kind of just don't really talk about the French speaking Canada. They just kind of do their own thing. We do our own thing. Every few years, they try to leave, but like they're literally right in the middle of the country, so it would never work. But they always like, oh, we're gonna leave, and so we're like, hey, we'll give you more voting rights, and they're like, okay, we'll be quiet for a bit, and then we kind of just let them do their own thing. So for the most part, it's the English speaking provinces we're talking about.
So I have a couple charts here that I want to share just out of the gate. I was reading some of these documents over the last while. The guy was making a comparison against Trudeau, so that's why it is appearing on both of these charts. You'll see. But what we're looking at is not only business investment, capital investment going into it. That right at about 2000 and think here, what was that? 2014, whenever Trudeau came in, not only did the business activity and investment start to really contract, what was even more unusual was the divergence within Canada's GDP. And this is going to get into something else which I'll show, and that's the affordability. This really is driven back by real estate, which is one of the main drivers in Canada because of the affordability crisis that they're having. Real estate there is not the same as here for a few reasons we'll point out. But even in the GDP, right about 2015 there, Canada diverged quite rapidly from the United States. And as you can see, that is exceedingly rare for Canada to not only diverge, but at this amount where it was huge. And this
AJ, for those who are not watching but listening, you want to describe the chart?
Yeah, absolutely. So it shows the GDP per capita and its growth since 1995 to 2015. I mean, they're basically identical to the United States. Now, the GDP per capita really changed after 2015 and basically went up a little, crashed, of course, during COVID, went back up, and now is back down and pretty much hasn't moved since 2015, where the United States has been just continually upward. So the divergence that sits today between Canada and the United States is very large. And a lot of this is going around the real estate. So there's been an affordability crisis, not just in real estate, but a lot of things in Canada. And so what I did is I took the main drivers and I plotted them out so we can talk about what's happening. There are some comparisons to the United States, which I think are really important. And there's obviously a lot. I took the main ones, and this was the main ones as size of impact and what we're looking at. So first of all, when you look at a comparison of the real estate, Canada to the United States, I divided up into categories to show. We took the affordability of all of these different categories, which goes into the affordability of real estate. Home prices, income relative to income to housing ratios, housing supply, interest rates, government policies, foreign investment impacts, renting, owning affordable, and then the immigration impact. Now, all of the different categories that you can look at, everything from interest rates to all sorts of stuff, Canada is much worse off than the United States. There's not one aspect of the housing or the real estate where you would really look at the affordability and how it's being impacted as Canada not being not only more impacted, but in some cases dramatically more than the United States. And the whole point that I'm using to show this, so when you look at anyone that's not watching YouTube, it's basically the rank of impact. What we've done is you take a look at both countries, these different drivers that affect affordability and the cost of housing ranked between the two countries, right? You look to say which ones benefited and which ones lost. That's the housing prices relative to income to housing cost ratio, overall housing supply, meaning that housing supply is that how much is that impacted Canada versus the United States, where it's literally double. Then you have things like interest rate stability, which Canada's the impact to housing and the cost is much higher because they have 5-year loans. They have automatic refi. We have 30-year mortgage, so that makes ours much more stable. Government policies have really changed and in Canada have become very difficult. And then you have foreign.
I want to throw one small caveat on this, though, AJ, and that's the concentration of the population. Canada is obviously not as big of a country population-wise in particular as the US. There's only about 40 million people in there. And what you have to realize is a place like Toronto, about 10% of the country's population lives in the Toronto MSA. And Toronto is kind of its own little animal where like think of how like Manhattan, how there's like natural borders to it, and it's the pricing of real estate can get really out of whack in there. Toronto's on the water. It's kind of got its own unique little setup, and it can get the pricing in that city can get pretty crazy. And there's particular some other cities, but like if you look at the top 5 cities in Canada, like 30% of the entire population lives in those 5 cities
or more.
So when you have major swings in those major cities in particular, then like, yes, you know, these stats you're going to look on at AJ, like you could extrapolate it for the entire country, but at the same time, a lot of it can just be problems in, you know, a few of these major cities that are skewing the entire data set out a little bit.
And just to throw some data behind that, because I agree, and I researched this a good bit today before this recording, because a lot of this was new to me, and what I found was you're both right. So AJ, Canada is having a lot of issues, but as Kyle pointed out, a lot of it's because Canada is a bunch of big cities, unlike the U.S., which has a bunch of big cities, but the majority of the population is outside of those cities. And in Canada, if you look, let's just use Toronto as an example, compare Toronto to New York City, what you'll find is that in Toronto, typical Toronto person spends 36% of their income on housing. New York City, 38%. So basically the same amount. If you look at the cost of a 1-bedroom apartment in the US, in general, it's about 3 times minimum wage. You have to make 3 times minimum wage to be able to afford a 1-bedroom apartment in the US. In Canada, it's about 2 times minimum wage. And so I think a lot of that difference is accounted for by the fact that Canada is basically just a bunch of big cities with much smaller groups of population around. The US tends to be much less homogenous.
And Canada also has a history in these big cities of speculative real estate. Well, I'm sure we won't get into it, but there is a lot of, when you talk about, we talk all the time about it's not very good practice just to invest for appreciation. That goes on a lot in places like Toronto. So that can affect, and it could skew the entire data set for the entire country. So I just wanted to throw that as a caveat before AJ starts blaming this all on the immigrants.
Well, it doesn't skew it as form of, because that happens obviously in the United States. If you go into Iowa, right, But when it's the people that are being affected, that's not skewed. So if you had 100 million people and 90 million of them lived in Toronto and 10 million out of Toronto, you'd go, oh, it's okay. It's not a problem because there's people that live in the Arctic that don't have this issue. You're talking about the population. So when you look at Canada, you're correct. The vast majority of all people live in 5, but really top 10. I mean, it's like over 50%, right? And so the problem is that obviously where there's people, there tends to be this issue and this problem. So the issue for Canadians, right, is then I guess, do I have to live out in the Arctic or, somewhere? So like, I completely agree, but it is due to the fact that that's where the people live. So the population is still being hit by these unaffordable prices. And in the United States, we aren't nearly as concentrated. Right? We have different states that are wildly different. And even too, amongst the biggest cities. So if you look at in the United States, take the top 10 biggest cities, half of them do not have not only supply slide, but cost problems like other ones do. It's pretty much concentrated in a few, not only cities, but states. So if you go to Texas, for example, similar population size does not have the pricing or the housing cost unaffordability as other cities and other states do, right? So you're right, it is, but it's still an issue. So because the people that live there, that's where they live. So
right. I was just saying, like, think of if New York City was having a massive housing crisis, like, but the rest of the country wasn't, people would kind of just be like, it's New York City, don't worry about it. But if Toronto's having a massive housing crisis, like that's a national problem.
Yes, that's a big problem.
AJ, do you mind if I share a screen real quick? Because I know you're going to want to move on, and I just want to address something that you talked about earlier.
We got to get all our points in because eventually AJ is going to blame this all on the immigrants. So we got to get our points in before.
I can move on to that next. You got it.
Let me just address something that you talked about earlier. So hopefully
you beat me to it.
Yeah. So Mauricio, do you want to talk about what I just put up?
Well, you're putting up that's exactly what I was pulling up. Is interesting is that the Canadian dollar versus the US dollar exchange rate, and I was just looking to see how it was doing in the last year, 2 years, 5 years, and I pulled up exactly the exact same chart. I'm looking at basically the exact same chart as you are, and I'm is that what
this is not the exchange rate?
I'm sorry. So I was looking at the exchange rate. What are you looking at then?
So I know we like to blame Trudeau for all of Canada's problems, and I'm certainly not going to defend Trudeau. I think he if you look at his policies, they haven't been particularly spectacular. But the correlation that AJ gave earlier was 2014, Trudeau took office and GDP started to kind of diverge from US GDP. What I've put up here is the price of oil over the last 10 years. And what we have to realize is Canada, their top export is fuel. They're a fuel-driven nation. And when oil gets hit, when there's an oil crush, whatever you want to call it, Canada is going to get hit in terms of GDP. And what we see here, for those who aren't watching this on YouTube, is right around 2014, oil got crushed. And from 2014 to about 2021, oil was kind of in a really bad spot. And that is what has contributed for the most part to the drop in GDP in Canada. Now, I'm not saying, again, Trudeau has done a good job. We can talk about that separately. But the drastic drop off in GDP that we saw between 2014 and 2020 can directly be attributable to the fact that oil crashed during that time.
Let me pile on to that, because if you also overlay the Canadian dollar versus the US dollar, if you look back to 2014, which is what I was looking at, the Canadian dollar is down about 20%. So if your export is oil, and oil, of course, is priced in dollars, you get the double whammy. You got the price of oil going down. In addition to that, you got your currency depreciating. You're just getting double whamboozled. So that may be another factor coming in. I was just curious as to how much the dollar exchange, although I think, AJ, your initial chart was all about ratio. So that really shouldn't.
Well, and one final perspective thing for Trudeau is a lot of these things will probably be shitting on Trudeau. And that's also because we just went through it. The expectation is that Canada is going to have an election in 2025. Canada's elections are a little bit weird, but basically the expectation is that's going to be in 2025. So there's a lot of we're basically going through an election cycle right now in Canada. So there will be a lot of articles of that type that'll be like, hey, look how bad of a job Trudeau's doing.
Yeah. And it's, when you look at Trudeau, he's even completely reversed most of his major policies. And that's, probably will continue because now you could look at gas prices. How much have gas prices fluctuated since 1970? And that had no correlation to the GDP per capita impact. And two, it makes up 6% of their entire economy. So the gas prices, yes, but the affordability crisis that they're having overall, which is a huge problem, is not just because of gas prices, like the housing shortage, which is massive in Canada. Like we think we have it bad. Canada has it really bad. Those aren't, strictly due. So that's why, we brought in each one of those categories that had to do with the main factors of the affordability crisis that Canada's having.
But really, there's one factor, AJ. I know you're skirting around it and you're going to get to it, but there's really one factor why.
Which is what?
Immigration.
Oh, immigration. Oh, I can do
immigration
that.
Is the only reason Canada is, I shouldn't say the only reason, but the major reason why there's a housing crisis in Canada.
It is a huge factor, but it is not the only reason. I think a few other reasons. The policies on developments, their development contraction has been massive. Interest rates, 5-year with the increase in interest rates have killed them. Immigration was one. They're a spread on immigration over the last 3 years, and what that's done to the main cities is astronomical. So the immigration swing alone for in immigration, but not just immigration, foreign investors. So when you look at, for example, BC, right? The policies put into place that allow you to get citizenship by buying and spending over $1 million on houses, that has really hit Vancouver because of Chinese buyers. Massive. We're talking, billions of dollars being pumped into Canada because of those policies. Now, once again, I'm not saying this was bad, but that just created a flow where those houses are being gobbled up, right? By
investors. It also created ghost towns
out
in BC, where there was basically ghost towns out in BC. They literally call them ghost towns because foreign investors, as I said, speculation in real estate in Canada was a thing, and foreign investors would come in and buy these places, and they would just sit vacant because they were like, oh, in 2 years these are going to go up by 20%. We're going to be able to resell them. So it was a big issue for a while too.
Big issue. And on that is a big issue, especially they saw it on the west side. Now, on the east side, immigration has been obviously the bigger issue. And that's just been the massive change. So it's not only that what was going on with it, it was the level at which it changed. They basically doubled over the last 3 years. And that's created a crisis in a lot of areas. So their immigration laws were very strict and have basically not changed. In fact, they were the oldest immigration laws of any country in the world.
Okay, can I brag a little bit? Actually, even it got brought up in the U.S. because Trump last time, I think, he was praising Canada's immigration laws, and we talk about immigration a lot, how the merit-based system. Well, Canada has that. Canada has a merit-based system. And before I praise it too much, I
like how you say praised as if you're Canadian. You do remember you fled that country and basically looked for asylum here in the U.S.
Chase and tail. There's chase and tail, Jay. No, but so I do recognize though the advantage Canada has, and one of the major advantages Canada has is we don't have a Mexican border, right? We have a single border. Otherwise, we're basically an island, and the border we share with is a very, very good country. With we're not having to take in any refugees basically from our land border. So I recognize that they have that advantage. But that being said, Canada uses immigration as an economic tool. So they will turn on and off systems basically to improve their economy based on immigration. So they have as I said, they have a merit-based system. It's a point system. They have something that's called an express. I forget what exactly the word is, but they have an express system too for things that they decide that are needed. So when there was a housing crisis, like I think it was like a year ago, they literally created an express immigration system for construction workers. They were like, hey, we need construction workers. They set aside like, $1.5 billion or something in order to get more construction workers into the country. And they created an immigration system for that. So they're the largest. The Canadian system is the largest in terms of numbers and almost the most elaborate and long-standing skilled labor migration system in the entire OECD. So it's been a real thing where Canada's immigration system has been great. And that's where it took a turn though with Trudeau, where the way people talk about it used to be a beacon in the world as an immigration system, and now it's kind of taken a turn. And there's numerous other reasons, and obviously there's a trickle down effect or trickle up effect, you would say, with the U.S., where kind of Trump's politics have kind of seeped into Canada a little bit. It's empowered quite a few people on that side of the aisle. But now, as AJ started to point out, like from 2021 to 2023, there was 800,000 housing starts. Over the same period, Canada's population grew by 2.5 million. And so the problem with that is obviously like those numbers don't add up. And 98% of that population growth was through immigration. It's the same as Canada, where we like or same as US. If there was no immigration, Canada's population would be going down. And so that's, to me, when I say, okay, what's the number one issue? Why is the housing been an issue? It's just that number right there. 2021 to 2023, 2.5 million people came in, 800,000 housing starts. Yeah. Like you like, it's just the math don't math.
So does that mean we have to rush out and buy real estate in Canada because there's so much demand?
Good luck paying for it. Woof. It's expensive.
It's kind of like, okay, when you're going to try and price the top. So like when I say Canada uses immigration as a tool, so now, and AJ has pointed out very pointedly, like Trudeau has been flip-flopping, if you want to call it that, or he's been recognizing the issues he created. I call it kind of whack-a-mole, right? Like he tries to solve one issue that creates another issue. So then he tries to solve that. And he's like creating issues and then putting out fires. And so now they've revised this and they've basically recognized that it is an issue and immigration caused it. So you got to admit, like they're admitting their fault.
Absolutely. They did a great job. They literally said, we got it wrong. Like, that's what you want to hear. Thank you. Just say it and then correct it. Like,
yeah, and so they've come out and they've created a whole system. They've recognized, they call them these NPRs, non-permanent residents, and it got up to 6.2% of the population was these NPRs, when traditionally before 2021 it was only about 3%, so it doubled. And they're like, over the next, I think it's 2 years, I think they have a plan to get that down to 5%. So like they literally are like, we are reducing this, and they're adjusting their merit and points-based system. They're adjusting how many people they're allowing in as on student visas and stuff like that. And so like they originally, I think it was like 500,000 new permanent residents, and now they're bringing it down to like 400,000 or 380,000 or something. So like they're adjusting. They're trying to get reelected, but they're actually admitting that they screwed up, which in American politics, I don't know, has that ever happened?
Yeah, speaking of trying to get reelected, there were some news outlets today even saying that there's the finance minister in Canada just resigned today, and it sounds like the odds of Trudeau being ousted or resigning have been going up. There's one of the Polymarket was up to, I think, 80% chance of Trudeau basically not making it past.
Yeah, his federal housing minister just announced too that he's not going to run again. So.
Yeah, so there's some interesting turmoil going on up there.
Yeah, it's a problem. It's a huge problem.
Yeah, also keep in mind, I mean, incumbents these days have not fared well anywhere in the world, simply because after the pandemic, we've seen a lot of global economic issues. We've seen inflation. We've seen supply chain issues. We've seen immigration issues all around the world. And so it's been really bad for incumbents everywhere. And again, I'm not going to defend Trudeau's policies because I disagree with a lot of them. But I will point out that like this isn't necessarily a Canada issue with an incumbent like facing.
Look at the UK. I just saw the UK. The polls were showing one of the sort of kind of the populace was also becoming odds-on favorite, at least on the betting side of winning the UK election. So,
and keep in mind, Trudeau's been there for 9 years too, right? Like Canada doesn't have the whole like 8-year limit. So like he's already been there for 9 years, and so like it's tough. Like that's a tough thing to kind of get over that decade mark as a ruling power.
It's the economy, stupid.
Exactly. It always is. So I think once again, I mean, Trudeau or not, it's not has anything to do. There's a bunch of issues facing Canada that aren't going to be solved though immediately. So this is the crux of it. It's not one issue, even though some are obviously weighted more, but it is how those issues combined. You have an increase in population, demand, everything else like that that's huge, while going off the back of years of foreign investors buying homes, right? Consolidating the market. Then COVID happened. And we also had the Great Recession, which affected them and their housing supplies, just like the United States. But then you throw on top of that the interest rates and how their mortgages works and the reset at 5 years, not a 30-year locked. They don't have the same quite protections that we do on cost. So these things all mount to where they're more susceptible to the rising in housing costs anyways. And this has created this really, really big affordability crisis in the country, which people are obviously really upset. And we think it's bad here. It's much worse there, but it's not going to, you can't just solve it with a lot of these issues. You have to put new homes out, and Canada has to put out a ton. The amount of people that, so Kyle talks about that number one issue is immigration. Well, yes, now the people are here. They're trying to bring it back to 500,000 when the average, though, was 250. It actually doesn't matter how much you bring in. That's not the point. It doesn't matter if one's a good number or a bad number, but the economy didn't prepare for it. So they were already on a shortage of homes. So who cares if they bring in 800,000 or whatever? I don't know. That doesn't matter. It's not country anything else. But the economy built because their immigration is so awesome, right? And it's, once again, this is the oldest standing merit-based immigration system in the world, but the economy was already short of houses. Interest rates went up, mass spike in immigration, all these different things. This really made into a perfect storm of an affordability crisis there. And and once again, it will obviously get tied into politics and everything next year, which I don't care about. It doesn't matter who's in there. They're not going to fix it. It's not something they can just wave a wand and get fixed. And so it's going to be really interesting to see how this problem persists as rent prices have skyrocketed in major cities. And it's become really, really difficult. And the new housing starts they're just not keeping up. So this isn't something that's going away. It will persist not only for years, it will be worse in the coming years. There's not enough coming out. So this is a story that we're going to continue to hear, but it is an underlying issue that shows what's happened in Canada over the last 10 years, how much they've diverged from the United States. In foreign investment income, which was almost always on par, just tanked compared to the United States. They've had all of these different things going on that their economy has really slowed down. Their buying power is lower now. People have less disposable income, and it's left their economy really fragile at a time when some of the largest expenses that they have, just like in the United States, right? The only difference was we had a stronger economy to offset a lot. We have 30-year mortgages, and we have a much more diverse economy across the entire United States with cities like we were talking about earlier. Whether you're in California or Texas, it's wildly different.
That's an interesting point, though, AJ. Like the 30-year mortgages, do you think that actually in when we went through this time here, do you think that actually hurt or helped the housing crisis? Because the argument that happened in the US was that, oh, because these people have these 30-year low interest rates, they're not selling their houses, right? So the inventory is at all-time lows because people have all these 3% mortgages. We have talked about the stats a lot, 80% or whatever have 3% mortgages. So why would they ever sell? Because they wouldn't be able to buy their own house back if at the new mortgage rates. Well, in Canada, you're not going to have those same supply constraints because the max you can get is kind of that 5 year. There's certain programs that go over 5 years, but basically the standard is you can get 5-year mortgages. You can lock in your rate for the longest 5, and floating rates are a lot more prevalent because of it. So is that a good thing or a bad thing, I guess, is the question.
And I guess it depends, right? But I think where it's happened in Canada, first of all, the amount of people that don't own debt on their home in Canada is massive for this reason, right? Now, that has the same as a locked-in payment, right? You have disposable, you live in the house, you don't owe anything, you're fine. But also, you get into the fact that they don't take as much debt out. So there's not nearly the vibrant housing market like you have in the United States, which means there's less development or incentives to, especially when prices go up, because it's not offset by lower interest rates. So when interest rates are low and equity rises and you've locked it in, you're getting really wealthy, and you want to stay, you want to lock that in, but then you can actually refi or put a second and get that money out of your home. And that makes the United States debt hungry, and it also creates spending, but it also makes developers develop because people can get into homes. Why? Because the DCR. So if I'm trying to buy a home and we're at prices where they are today in both the United States and Canada, but yet one, right, you're sitting here going, I can adjust interest rates, or at least I can control and I can fix them, where the other interest rates are going up and down and you're susceptible to them, you can't plan. And so it's a lot scarier proposition when you have something that's that expensive and it's gone up so much in the last 3 or 4 years. If you look at the last 5 years and you bought a house, then you're refining, your interest rate has changed wildly. And that has gone straight to your pocket. It's just gone out of your pocket. And so it has this trickle down effect through the whole entire economy.
There is some hope, though, I guess, if we're going to try and wrap this up a little bit. There is a little bit of hope because, first of all, if you've been paying attention, the Canadian government has lowered interest rates quicker than the U.S. has. Inflation has gone down quicker as well, which has allowed them to do that. Canada is very dependent on the U.S., so they are hoping that the U.S. is following suit and coming down as well, because there is kind of that. They do affect each other, but they do at the moment. They do have lower interest rates than the U.S. does. That's one. And then two, if you want to talk about rent rates, over the last year, we have seen a correction. So if you look at these major cities like Vancouver and Toronto are usually the top two that they talk about. Vancouver is down like 11% as far as rent is concerned. Toronto is kind of more in the 8 to 10. So those major cities have started to correct a little bit, but that's also, as I said, with Toronto and Vancouver, it's not necessarily a lot of rhyme and reason, because there's a lot of speculation and a lot of overbuilding, underbuilding, switching back and forth. Like Toronto's so in demand that I don't know if you saw it happening in like Dubai and areas like that, but Toronto actually is increasing their shoreline. So it's so developed down by the shore in downtown Toronto that they're actually pushing the shoreline out so that they can build more condos. Condos are super prevalent in these major cities in Canada, more so than in the US. But so they do recognize that it's an issue. They're changing their immigration status on it. They're trying to bring in more construction workers, and we've already seen a correction in rents, and we've seen them bring down the interest rates. So there's hope that things are getting better.
But it's still like the United States. Like, people that think lower interest rates for us in the United States, it doesn't solve the housing crisis. It won't. The lowering interest rates doesn't mean housing isn't necessarily even going to become more affordable to you. right? That,
but I guess what I'm saying is
immediately-
recognition is the first, right? Like that's the first step. I feel like a lot of places in the U.S., like if we could just recognize like what the issue is, and them recognizing it's a supply and demand issue, that that's huge to me.
Absolutely. And they could probably unroll it faster because the states fight here. Canada could actually probably initiate it much faster than we could here.
I hope you're not offended, but when you said shoreline, I was like, shoreline. So I had to like look up where Toronto was on the map and like, oh, there's a lake over there. That's what's going on. It's right next to New York. Now I know where Toronto is.
They're actually Great Lakes, Mauricio.
You said shoreline. I'm thinking the ocean, like the beautiful Pacific Ocean and warm weather.
California.
You're like a lake up in the freezing. I've been to Toronto.
Shoreline when it's not frozen.
Glass number 2 of wine.
All right, should we move on to this? And Mauricio, you're chomping at the bit. I could tell to talk about the next topic here,
dude. I'm getting a little buzzed already. That's what I'm going on.
I'm already buzzed. Also,
we still got another 3 hours of recording. So
this is gonna be
let's keep
boys buckle in.
I can tell you, just to give you guys a heads up, I'm going to run out of. I'm going to have to go make a quick run somewhere and get some more stuff
because you drank it all.
Anyway, so what's next?
So we're talking next. Should we just start throwing out names, Mauricio? Because you threw out names. We were talking about how prevalent right now Cody Sanchez has been. Cody Sanchez she was the keynote at our last Bigger Pockets, and it's become a very hot topic in the real estate community about buying businesses. Where it's kind of, you've seen in the real estate industry things shift to like, oh, multifamily is the new thing to buy, self-storage is the new thing to buy, mobile homes are the new thing to buy, and we kind of shift all this around, and it's becoming a thing about buying businesses now. And a lot of people are starting to say, oh, buying businesses, that's better than buying real estate. And I think that's kind of a gross oversimplification of it. And I think maybe we should dive into it a little bit because as Mauricio, I think, is going to point out, it's not just that simple.
Yeah, it's been interesting. So I thought this was a great topic because literally my feed has been full the last couple of weeks with these Cody Sanchez type clips about how real estate is just an awful investment. And so I wanted to do a little bit of a deep dive into that and kind of articulate what her argument is. And for those of you who don't know, Cody Sanchez has really come onto the scene probably in the last a couple years now, or a year to 2 years. She's really come onto the scene. She's originally I believe she was a journalist who did a lot of work down on the Mexican border and then transitioned into the finance world and really worked in private equity. She spent a lot of time at Goldman Sachs and State Streets and some of those big brokerage houses. So she's really well-versed in the finance stuff. And then I think during COVID is when she started her contrarian thinking brand, which is sort of educates people. Their mission is to basically create 1 million financially free humans through business ownership. So she does focus on business ownership.
Can I throw out one quick thing? I'm going to take a little bit of credit here because
Oh yeah, that's right. Take your credit. Take your curtain call. All right,
got to take my credit when I can. So Cody Sanchez, my wife and I used to co-host the Bigger Pockets business podcast back in like 2018 through 2020. And Cody was actually our final guest on the final episode of the Bigger Pockets business podcast. And it was a fantastic episode. She's super smart. And that episode kind of went viral. And nobody knew who she was before that episode. 6 months later, she was huge. So I'm not necessarily saying I am responsible for her meteoric rise, but her coming onto my podcast.
But your wife was.
Yes. Coming onto our podcast coincides with her meteoric rise. I will let everybody else kind of fill in the blanks.
Yeah, and look, just to be honest, I'm a big Cody Sanchez fan. Maybe it's the Latina and Latino in us that have that thing, but I know a lot of folks that we know we respect are big fans. But basically, what her position is that real estate is one of the best ways to lower your taxes and keep your wealth, but not necessarily a very good tool to actually make money or accumulate wealth. And I've heard that same argument made by the likes of Grant Cardone. Grant Cardone started his career by basically he's a sales guy, right? So a lot of sales training, made a lot of cash flow, and then turned that cash flow into real estate. And that's how a lot of them started. And Cody believes that real estate has a role in your portfolio, but it's got to be partnered with something that cash flows, and in her world, it's businesses, right? So the idea is you take that business, you cash flow that thing like there's no tomorrow, and then the excess cash that you produce from that business goes into real estate. And she often gives the example, which is kind of what I really wanted to give her a hard time on, because she gives the example of the average single family rental. And that's really where she focuses. So maybe that's the first critique, even before I get to her argument really, of her position, is that she really focuses in on residential real estate. And she gives the examples like, hey, if you go out there and you buy the average single family home as a rental, cost you around $400,000. I think that's kind of the clips that are making the round. You take on all of that risk, all of that personal guaranteed risk of a $400,000 house. And at the end of the day, what are you renting this out for? You're renting it out for somewhere in the $150 to $300 a month. So a lot of risk you're taking on by taking on that huge debt with not a lot of upside on the cash flow situation. And you contrast that with buying a business. And she claims that same thing. You can buy a business either through seller financing or through an SBA loan. So kind of a comparable in terms of what you would put down as a down payment. But instead of cash flowing $150 to $200 to $300 a month, you're cash flowing, according to Cody, tens of thousands of dollars, right? Because I think there's a statistic out there that says the average small business cash flows between 7 and 10%. So she believes that that's the way to actually produce the cash flow, is by investing in these businesses. And again, she kind of leaves out obviously all the other. She does point out to the tax benefits, of course, of real estate, but she leaves out all of the other stuff. I don't think anybody in this panel, are they're already getting the pisco to me. None of us here are necessarily believers that you're going to get rich on real estate and make a ton of money on the cash flow. So she does oversee a lot of the sort of principal pay down from your tenants. Overlooks a lot of the capital appreciation, which I think is really where the real estate. Because if you look at even real estate, and you look at buying a piece of property at the peak of the last cycle, right? What was it back? What was it? I was going to look it up. I didn't do that. What was the average single family home price in 2008, right before the crash, 2009? I mean, if you bought a home at the tops of the market's pretty forgiving in real estate. I mean, in most markets, if not all, certainly the average home price is higher today than it was back in 2008, 2009. So the market typically bails you out. When you buy a business, if you buy a business that's just not doing well, it's a lot of work, man. And you got to actually really, really roll up your sleeves and get in order to get that thing to cash flow.
I think there's a lot of correlation, though, with the run up of syndication. Like if you look at, like I talked about the shiny object thing before. If you look at a syndication, like in real estate, that is a business, right? Like I would say it's more of a business than it is real estate. It's a business that is on top of real estate, and our business is trying to get people to rent units in a complex, whether it be self-storage or multifamily or industrial. It's a business of running and trying to provide safe, clean, affordable housing for people and convince them to live in our units. And if you look at it, like both have balance sheets, both have P&Ls, both have rent rolls and whatnot and stuff like that. It is a business. And there was a huge run up of the exact same thing Cody Sanchez is doing, of people coaching and trying to teach people how to buy apartment complexes, and then self-storage, and then mobile homes, and then all that stuff. And the problem I wouldn't necessarily say is with so Cody Sanchez. I've obviously haven't taken her training, and I'm sure if you go through her training and do everything properly and follow everything, then you will have the full gamut of what you need to know. The problem is most people don't take it all the way. Like they're going to take the first part and they're going to say, hey, this is how I buy it. This is how I acquire it. And this is how I sell or finance. And this is how I, go about buying a business. Same as with the real estate. And then they kind of like, okay, I take it to that level and they get excited and I'm going to go buy it. And they don't take the next step. And that's my problem with a lot of the training with syndication right now. And I would say the issue that's happening right now in multifamily is once you get past that first year, second year, like if you're not able to turn around and sell it right away, like you got to know how to operate these properties, and a lot of these people don't know how to operate them, and that's why you're finding a lot of foreclosures and people having issues is they're not operators. You can't be everything. You can't be a good salesperson. You can't be a good negotiator and a good operator and do all these different things. And people were kind of like, okay, what's the step that I can leave out? Oh, I can leave out the operations because in an upwards
that's next year's problem.
right. And in an upwards market, we had an upwards market in multifamily in particular from like 2015 all the way up to 2021. And so people were buying it and they were renovating these units and things were going easy because they would, by the time they were done renovating these units, cap rates had gone down, the demand was still way up, and they could just turn around and there was a huge market to sell it, I guess is where I'm getting at. And this model of buying businesses, it's going to be a fine model as long as this is still a hot topic and there's still a big market of people willing to buy these businesses once they're quote unquote fixed up or once they've been renovated, if you want to use the real estate term. But as long as there's a market for people to turn in and buy this at the inflated value, this is going to go great. But the moment that market dries up a little bit and there's not that demand for it, people have to know how to operate these businesses. And my problem with businesses is like, there's how many thousands of different types of businesses are there out there, and how can we expect how we're going to know how to run all of them? Sure, there's a marketing aspect that might transition.
They're all operationally heavy. I mean, one of her favorites, and actually one of I've been looking at a lot as well, is these laundromats, right? And it's like, oh, laundromats, you buy these things and you just basically, rent out in essence, it's a very similar model than real estate where you're renting out the real estate, except here you're renting out the laundromat, the washers and dryers, and the people are paying you $1.25 or $2.50 or $3 for a wash or load. But you got to be able to operate it. At the end of the day, it's still an operations business. And whether it's a car wash, whether it's a laundromat, whether it's the, dry cleaning, whatever it is, you just got to still know that business. And I think one of the advantages of real estate, it's a little bit, especially on the single family side, it's a fairly simple business model. It's not super complicated. There's not that many moving pieces to it. You got your place, you rent it out. Businesses have a lot of moving pieces, as you guys know.
I think we need to step back because there's a more fundamental issue at play here. And again, I have no issue with Cody. I think Cody is super smart. I like Cody. She's clearly successful and knows what she's talking about. But when somebody's trying to sell something, they're going to spin it in a way that's most advantageous for themselves. And this isn't just her trying to sell running businesses or buying businesses. This is a problem I see in the real estate industry in general, which is that when we talk about real estate, we use the term investing in real estate, but it means a whole wide array of different things. So I like to think of it as flipping a house versus a rental property. They're both investing in real estate. I mean, from a 10,000 foot level. But the difference between flipping a house and buying a rental property is night and day. One of them is an active business. One of them is equivalent to basically you're going out and you're spending your time and your energy and your knowledge and your efforts to generate a profit. The other one is you're taking your money, and if you do it right, you're investing passively to receive a return. And so we shouldn't be using these terms interchangeably. We shouldn't be saying investing in real estate when we're talking about flipping houses and buying rental properties. We need to recognize that there's two distinct parts to buying real estate. One is the active part. You can flip properties, you can wholesale properties, you can do syndications. This is where you trade your time for money. And this is what's equivalent to buying a business or being a consultant or working a 9-to-5 job. You are literally trading your time and putting in the effort to generate a return. And then there's the other half, which is the passive investment. That's buying a rental property and hiring a property manager to rent it out. That's not equivalent to flipping a house. That's equivalent to taking your money and putting it in the stock market, or taking your money and putting it into gold, or taking your money and putting it into Bitcoin, or taking your money and putting it into some other passive investment that you're hoping is going to grow without your involvement. And so when Cody says buying a business is better than real estate, well, if you're talking about it's better than passive real estate, of course it is, because it's different. You're trading your time for money. and you're not going to make as much money in a passive investment as you do in an active investment. And so you can't compare running a business to buying a rental property. Running a business is always going to be more profitable if you're successful, but that's because you're spending hours upon hours upon hours of your life to do it. If you want to have a real comparison, compare running a business versus running a flipping company or a wholesaling company or a syndication company. And if you do that comparison, what you'll find is that it really depends on how successful you are, because both of those are trading your time for money. I know consultants that make a whole lot more money than business owners or house flippers. I know doctors that make millions of dollars a year as specialists, as anesthesiologists, more than business owners and house flippers. I mean, if you're going to trade your time for money, find the highest and best use of your time. And it doesn't matter if it's real estate or business ownership, but don't try and compare business ownership to passive real estate ownership, because they're two.
Well, but the one reason I guess that's differentiates right now though, and that what I was getting at is the reason it's lucrative right now is there is a inefficient market for it, right? Like there's like I actually I would make the argument there's a great market for it. That the thing is that you can trade your time for money, as you said, into fixing up this business, but you're able to turn around and sell it right now for a big profit is the different.
It's a flip.
Right.
It's a different asset class that you're flipping.
Right. And the problem that I'm saying is that, like, if there isn't that market for it, like we're seeing right now, there's not a huge market for selling multifamily or self-storage or like that, the transaction volume's down 60+%, then that business model all of a sudden shifts to you now own an operating business, and you got to know how to operate that. And that's something that we've already seen with these syndications, that people kind of skimped on that. And I'm concerned that people who are coming from these syndications saying, oh, this is, that's no longer the hot topic, let's do buying businesses instead. It's going to be the exact same issue that we fall into, that it might go well for a while there's a great market for people who are looking to buy these businesses. But the moment that dries up a little bit and transaction volume goes down, then we're going to have issues.
Yeah. And one of the other things that Cody doesn't talk about is that there are different size businesses. So you talk about the fact that every business is going to be run differently. But what you'll find is if you buy a $5 million or a $10 million or a $50 million business, you as the owner operator may not have to do much at all. You're going to have a good general manager in place. You're going to have somebody running that business. You're going to have a good set of employees running that business, so that you may not have to know the day-to-day details. You need to understand financial statements. You need to understand supply chains, cash flow management. You need to understand all these things that a business owner needs to know, but you don't necessarily need to know the day-to-day. But if you're going to buy a $100,000 business or a $500,000 business or even a $1, $2, $3 million business, you're going to be involved in that business day to day.
But Jay, that's the same exact argument that all of these gurus, as you say, for syndication use with property management. Oh, if you're buying a small single family or if you're buying a small multifamily, then you're actually having to do the work. But if you buy a large one, if you're buying a $10 million or $20 million multifamily complex, then you can hire third-party property management and you're not going to have to do this work. And what have we seen since we've owned these properties? That property management, sure, yeah, they're the hands-on day to day, but you need to hold their hand. You need to be there. You need to meet with them every single week, sometimes daily, when there are issues, to figure out how you're going to fix these businesses. And so like that's my point, is that, okay, when things are going great and you're only owning these businesses for 2 years, sure, your general manager is going to take care of this and everything's going to be fine. But then when you have to have these longer holds, and then there's bigger issues are creeping in because you haven't been keeping an eye on this thing like the old owner used to keep an eye on it probably daily. And this general manager, small things start to creep up. And after 2 years, all of a sudden, geez, why is our business is down 6%? And I can't sell this. What am I going to do? And you don't know how to operate it because you've never operated a car wash or a coin operated laundromat or anything like that. You don't know what you're doing.
No, I don't disagree with you at all. But I do think running large businesses, just like running large apartment complexes, there are efficiencies that you can remove yourself from the day to day. We talk all the time about buying a 100 unit or 200 unit apartment complex is easier to manage than buying a 30 or 40 unit apartment complex. The problem is Cody is advocating buying the equivalent of the 10 or 20 or 30 unit complex. She's advocating buying the smaller business where you actually do need to understand how to manage it because you're not making enough money to hire a full-time staff of people, an accountant, a general manager, somebody to deal with inventory issues and all of these things. You're not making enough money to hire all those people. So you are going to be involved in the management day to day. And so I think that's part of the problem is I think it's a good analogy. I think I just disagree with you on, or maybe I don't disagree with you, but we're just talking over each other. I think it's a perfect analogy. Buying a 20 unit apartment complex is a lot harder to manage than buying a 200 unit apartment complex. Cody is saying, go buy the 20 unit apartment complex equivalent of a business.
Right, because yes, but when she's comparing it to real estate, she's specifically talking about the single family garden variety 400 grand, and she's not even talking about value add because then when you introduce, she literally says you can't do any value add. You basically have to look at the appreciation, which is historically 5% or 6%. But then when you say, well, you could do you can fix it up, you can buy a fixer upper. It's like, well, but that includes work. Now that means you could actually do some work on it. It's like, yeah, but what do you think you're doing in the business? You've got to go in there and do some work. You can't just go buy a laundromat, assuming you even bought it right, and just sit back and continue to do whatever it's been doing. You've got to put some actual work and you've got to have really specified knowledge of that particular business. And if you're buying a car wash, for example, and you have no idea how a car wash works, or you just learned it in a course over 6 weeks, you're going to have a hard time competing with somebody who really knows the business really well.
Although I hear they're really great for laundering money.
You know what's interesting is I saw a video of hers where she included real estate on it. Her video was titled like seven businesses with shockingly high failure rates. And she included real estate as one of those 7 businesses, but all she talked about is how awesome real estate was in that video. It was literally, hey, it's got, an 85% success rate. There's 44 million renters out there, half of which are owned by mom and pops. It was just kind of
and what's the definition of failure in real estate? I feel like that's a big difference because when a business fails, like there's a very high probability that value goes to zero, right?
You're going bankrupt.
Yeah. When a real estate fails, I mean, there is the scenario where you get over leveraged and the bank takes it back and your investment goes to zero, but the actual value of your quote unquote business of that real estate never goes to zero. Like you always have that value in there. Like with anything, you can get over leveraged, and that could be what screws you is your leverage. But the core business never goes to zero. So that's kind of why it's been such a fundamental investment in our society of that intrinsic value that's always going to be there. People are always going to need places to live, and there's always going to be value in that real estate at the end of the day, even if you screw up operating it. So like it's just, but as you said, like it's a marketing thing, right? Like she knows obviously where her demographic's going to come from, and it's going to come from people right now who are frustrated in real estate, right? There are a lot of people out there who are frustrated in real estate, who feel like they're doing a lot of work and not making any money. And they look at it and they say, hey, I could be doing the same amount of work, solving the same kind of problems, but in a business that is cash flowing 10x what a real estate investment's going to cash flow. This sounds great. And so it's, if you're talking about where am I going to add dollars going to be, that's the people that you're going to want to target right now.
Yeah, that's something I want to point out too. I mean, you always want to follow the money, and not necessarily it's a bad thing because obviously, AJ's a self-storage guy, and obviously you're going to talk about self-storage and you love self-storage because that's what you're in. Remember, Cody, number one, has a private equity fund, right? She's actually she's a syndicator. She's raising money to go buy businesses. So she's looking for people who are interested in that. She's showing you how to do it. And she's got an easy button for you. If you don't want to go do all that work, you can write a $50,000 or $100,000 check into her private equity fund. Nothing wrong with that. And second of all, is that she's got her course. She's got her basically her course. She teaches people how to buy businesses. So obviously she's got a financial interest and a marketing interest in doing that. Again, nothing wrong with that. She also points out that, in the Forbes 400 list, if you look at the top people in the Forbes 400, if you want to become a millionaire, it sounds like real estate's a really good avenue, according to Cody. But if you want to become a billionaire, not many become billionaires through real estate, and she wants to become a billionaire And so I think that's another reason she's kind of focusing more on the.
And you have to keep in mind too, most people aren't as smart and as driven as Cody Sanchez. So because a business model works very well for her, doesn't mean that it's going to work for a lot of people. And I guess that was kind of the draw to real estate and single family, is that it's almost like the caveman can do it thing, right?
Yeah, but that's the same again with everything. Again, I'm going to pick on you, buddy. But AJ, you're one of the top self-storage guys in the country. Everybody seems to think, oh, I just go buy a self-storage unit and I just go fix it up and make it work. And it's like, no. You've got to know what you're doing. And Cody knows what she's doing when she's buying businesses. I don't know if the average Joe or Jane knows what to do or can handle situations when they actually get in there.
I'm going to leave it at this. This is the last thing I'm going to say, but if you want to make money in this world, you need to know how to do two things. You need to know how to make the money, and then you need to know how to invest the money, and you need to treat them separately. And so if you want to get wealthy in this world, number one, focus on how are you going to make the money? What are you going to trade your time and your effort and your knowledge to do to generate money? And you find the highest and best use of your time. Maybe it's buying and running businesses. And if that's it, absolutely go talk to Cody, because she'll help you do that. Maybe it's doing syndications. Come talk to AJ or me or Mauricio or Kyle, and we'll tell you how to do it. Maybe it's
don't come to me.
not Kyle. Maybe it's being a CEO of a big company and you can make tens of millions of dollars a year. Maybe it's being a consultant. Maybe it's being a doctor. There's something that is the highest and best use of your time to generate income. And then once you generate that income, you need to put it somewhere. You need to invest it somewhere. And so figure out a strategy there. Is it real estate? Is it Bitcoin? Is it the stock market? Is it investing in other people's businesses? What is it? And think of these as two completely separate things. And so when Cody says business is the best, compared to what? Well, maybe compared to being a doctor or a consultant or a CEO or a house flipper or a syndicator. That's up to you. You need to figure that out. But don't compare all of that active spending your time to make the money with where you're going to put the money after you make it. That's completely separate. And so just think about things in those terms. What am I going to do to make my money? And business is a viable option. Real estate, active real estate's a viable option. And then what am I going to do to invest my money after I have it? And again, I like real estate. I think it's the best option, but whatever you want to do.
Go make your money and then give it to AJ and Jay. There you go.
There you go.
All right. Should we wrap this up? We got, as I said, we got another recording to go here, so we should probably go pretty quickly.
I'm on my third glass.
I still plan on doing a top 10 though. I'm sorry, Mauricio. I will skip the game at the end. But I thought it was kind of funny because I saw this list for Philadelphia, and I thought, okay, maybe we could do this list for national.
You start with Canada, now we're doing Philadelphia. Like what's going on?
No. If you were just listening, I said I saw this in Philadelphia, and I thought I'd look up the list nationally, and I want to know who the write-in votes were for president. So if you look in the ballot, you have your selections, you have your Republican, Democrat, Independent, you have some actual sanctioned candidates on there, but then also it gives you the option to write things in. And I thought some of them were pretty funny for Philadelphia, but a lot of them were kind of inside jokes too, that a lot of people wouldn't get.
It's RFK got bailed from so many ballots. I got to assume he was up there somewhere, right?
Well, so I took those people off.
Okay.
So I took off like Joe Biden. I took off like people who were actually politicians. And
you're looking for like the Joe Rogans of the world.
Oh, you're right. I'm bringing this down to like people who are kind of more celebrities and public figures that as far as the list is concerned. Like even
I do ask a favor. Just leave me off the list. Just go down your list. Don't mention my name. I'm shy. So when Kyle doesn't mention my name, it's because I just asked him not to.
Where were you? South Carolina? I don't know. Anyway, so yeah, like even Barry Goldwater was on there. Like I feel like not, he died in 1998 or whatever. So anyway, right up at the top of the list, Beyonce, not shocking. Next one, fictional character Clark Griswold, was one of the top write-in candidates. Connor Roy, also a fictional character. He was a character in Succession. So apparently that's the type of president they want. Number 5, my favorite, Dwayne "The Rock" Johnson. Just watched Red One with my kids. That's a fun movie to watch with your kids. Ed Sheeran, which kind of surprised me. I didn't realize he had the popularity of being a president. And this one's great though. Flava Flav was up there on the list as far
Don't
as
believe the
presidential
hype.
candidates.
By the way, are these like protest votes? I mean, are people actually standing in line to vote to then do this, or do they just like, hey, I really want to vote about my local politics and my Senate and my House, whatever, and the president? Forget it. I'm going to make some crap up.
So that's what I thought. Maybe it was there was a higher amount this year just because people were, they wanted to vote, but they hated the presidential candidates. So maybe they went and voted for their local and Senate and stuff like that, and then just wrote something funny in instead of not voting at all.
I would vote for Flava Flav because I suspect he would want to outlaw daylight savings time.
Yes,
because who wants to have to set the clock back on your neck every
little preview as far as our prediction episodes. Daylight savings is on there. Harrison Ford made the list. Apparently, everyone loved him. What was that movie? Air Force One as the president. Thought he'd do a good job as a real president. One of the main reasons I wanted to do this list: Jason Kelce, my boy from Philadelphia. He made the top list, and then sneaking in near the end, I'll just throw out Kid Rock and Matthew McConaughey too. So there you go.
All right.
There's some of the people who decided that these are good presidential candidates, even though they weren't voted in. Anyway, all right. Should we do plugs? I guess might as well still do plugs, right? Even though we're doing 2 episodes. So what's Mauricio? You're at the top of my list this episode. So what do you got,
dude? I'm plugging my brand new syndication legal coaching program. We're doing a pre-launch. Just comment coach down there on the YouTube channel, or I don't know, just reach out to me and we'll get you in on a pre-launch price. But if you're a syndicator or you're planning on syndicating in the future, come join the coaching program. It's a steal.
Wow, one-on-one coaching from Mauricio. Wish we had that around back when we got started.
Giving it away.
Jay, what do you got for us?
Yeah, anybody that wants a discount on a coach purse, just comment below coach in the YouTube, and Mauricio will reach out to you. Yeah, Mauricio gets my plug to this week. Congratulations, man.
Double plug. AJ, what do you got?
You know what? I think I'll plug the podcast, Self-Storage Income. You're interested in self-storage, go check it out.
I will say we did not get to 1,000 signups on DRE Daily, so we are rolling over. We are rolling over the contest, the drunk real estate mug, and now I will give away 2 mugs to the 1,000th and the 1,001st.
Jay, you can't up it, because that's the implication is that people will just wait then, and they will wait to.
But they don't know how many we have.
All right. Well, speaking of purses. Actually, I'm going to plug my wife again. Apparently she plugged herself last time.
It was awesome. Yeah, it was awesome.
I appreciate her ability to do that. But go check out Badass Investor on Instagram, YouTube, all that fun stuff. Thought she did a great job last time. Tried to make fun of us a little bit, and it was fun. So go check her out. She's a pretty funny person, and she's much better looking than Jay. So follow her instead of Jay. That's all I got. We're down. Episode 1 is down.
Join us in 2 weeks because we're getting ready to record that episode, and I'm already pretty buzzed.
Here, I'll just finish this off here.
Oh yeah, this is gonna be a fun predictions episode.
All right, ready to go. Let's roll in the next one.
We're rolling. I thought we were gonna take like a 10-minute break. I need to go.
I need to go change my shirt.
Go to the bathroom.
I will see you in 10 minutes.
2 Tuesdays.
Yep.
See you 2 Tuesdays.
See you next 2 Tuesdays.
See you in 5 minutes.
All right.